Good morning, everyone. This is the February 18th review of tickers that you guys have asked for. As usual, first of all, this is a long weekend in the US, not the rest of the world. Enjoyed a long weekend. Second, I always start with the review of the indices. This is a chart you've seen before. If you haven't, you've somehow missed it. I'm not sure how. This is the S&P, represented by the SPY. It's the ETF. Weekly chart. Every candle of 1 week. Last week was amazing. The bears had their time to shine. How do I know? That long wick down below. The bears were idiots. Let it happen that they closed on the high of the week. Yeah, it was a red tick, but it was not a bearish tick by any means. Not yet. So where are we headed? Without a new shooter drop and without a change in mindset where right now there is absolutely no fear. How do I know that? The VIX fell below 14 again. But the bond market is somewhat listening. We'll talk about that later and throughout the week. Listening to what? The fact that we're not likely going to have rate cuts as many as I would even put on the table that there's probably no rate cuts all year, unless we have a severe deterioration in the actual data that's coming out, GDP and such. There's no evidence for a need for a rate cut yet. In fact, there's evidence to say, hey, let's play a caution and not cut rates, because first of all, we don't need it. Second of all, inflation is still not out. Maybe this set of reports for CPI, PPI was weird, but if it wasn't, we still have a problem on our hand, and the Fed declared victory way too soon. Remains to be seen. Meanwhile, this is the SPY. It's broken up from 460. It's headed to 530 to 550, 560. That's the measured move, that long red stick. I will have a video on that tomorrow evening. Why? Because Monday we're off. I'll do my Sunday video on Monday night. Okay. We will have a future session tonight. If you log into your futures, you will see them moving again tomorrow because the world continues to trade. Again, so the bulls are in charge. The bears need a change in mentality. What will cause it? I'm not sure. I don't watch CNBC. It will probably require experts saying it or a large company. And this week we have Nvidia and Walmart reporting, I think. Anyway, Nvidia definitely reports. Walmart has a weird split of sorts. Home Depot might be also having something. Anyway, so it will require a large company saying, hey, we're still going to beat our numbers, but you guys have overpriced our stock. Rarely do they ever do that. So it's going to have to be a bunch of experts that go out there and start instill fear in people, because right now there's zero fear. All right, on to the tickers we have looked at today that you have requested. First on the list, alphabetically ordered, is Apple. Apple is not acting well. The market is in an all-time high situation. Apple isn't. So that's a symptom that Apple is either leading, saying, hey, what are you guys doing? You should be down here. Or lagging and is going to have a big blowout. I'm going to look at that blue box and tell you it's going to be in the blue box until it's not. What does that mean? This is the reaction to the earnings. So they basically gave us two extremes. Whoa, we love it. Whoa, we hate it. We're still not sure. They're still in the box. I tell you one thing. If we lose 180, 179, the low from early February, we will end up at 172, maybe lower. So this is another box right here back on the left between 181 and 169. That's another earning reaction from November of last year. So we're going to go from the blue box to this box. So we'll be playing down here. That's not a forecast. It's just a statement. If we lose this red line right there, we're going to end up inside this box from before. That target from before will become target again. There's plenty of support. That's a lot of support. There's plenty of resistance. As we approach 188, 189, to me, if I'm long with calls, I would exit. It's a lower high situation, and it has a lot of volume. So Apple has its work cut out for it. I wouldn't hold calls. Adobe fell apart. This is falling apart in this day and age, but it's not a surprise. This was a prior target. They came to it once, and they're coming to it again. Head and shoulder missed right there. The trigger was 597. I think I've mentioned that before, that the downside is $41. So they overdid it on the downside. So Adobe, if it's not on my list of investments for next week, I would look at it. It is not. I'll add it. I'm surprised not a lot of people came and asked me. Good company, still in the moon. Look at it. This is a weekly chart. This chart says don't catch it, and if you do, leave room for a lot more downside. Why? This red W says target 1 is 495. Yes, 495. Target 2 is 420 or lower. Not always do they get to target 2, but almost always they get to target 1. So just to be on the safe side, I would not buy calls. How do I catch a falling knife without buying calls? I would use something like a credit put spread or a sold put. Nick, you always say that. Yeah, but it's always more true than the other way. It's easier to say where stocks are not going to go rather than to say where they're going to go. And if you look left on my screen, you will see these gold bars. There's a lack of bars down here. That's a gap in the action. When they rallied last May, it was too fast. They didn't build a good base. They just took off and they consolidated. So what am I saying? If they lose 520 or 500, it's an easy trip to 420. That's how that second target happens from the weekly chart. So how do they get to the weekly chart's target 2? Is they lose target 1. They get to target 1 and they can't hold it. The trip from target 1 to 2 will be quick. It will be hard to trigger, but it will be quick. All right, so I would not, what would I not do? I would not buy calls unless I'm trading for a bounce Tuesday, Wednesday. I would not add to current positions because I don't have a bottom and I don't have any new information. I would fade the rally. If I do get long, I would exit if we get a bounce to 570, 580. If I'm long already and I get a bounce, I'd consider exiting or defending, buying a put spread on strength. So the curl could be devastating. Let's say they bounce and they cannot take out resistance, they will curl. And if they lose that, the downside would be something like this. So you see how it can come to, and look at the gap down here. So there is a void, there is a weakness. That's going to take me a bit to spell it with these sticks here. Weak. So if we lose this zone, all right, this is not a reason to buy a put, but it's a reason to not buy calls. Okay. AEHR, I've walked away from this. Somebody said it's making a turn, MACD, blah, blah, blah. Too small of a company. Somebody asked me just this morning, what stocks would I usually trade? Not this one, but I have gotten in contact with this one because of people who I respect brought it to my attention. It is easy to reverse off of a floor, but it's not easy to recover glory. So I don't know if they're going to get back to 22. And if they do, I know it's a selling spot. Why? That's what they've been doing. Look at it. There's a descending channel. Yes, it might have some upside, but only to be sold. So be careful. Yes, there will be a bottom at some point, but in July, it was $9 of 2022. So it can easily go there as an investment. So as an investor, I would use strength to get out of my positions or shore them up, as they say. If I bought it for the dip and I made money, I would exit. They do have some support at 1650. If they lose 1650, they're going to 15 again. So be careful. AES. All right, we have lines. It looks like this turquoise, this aqua color is coming to fruition. What do I mean? There was a consolidation zone between these two parallel lines I drew. And I said, if they lose the bottom end, they're going to come down to here. So they lost the bottom end. The natural knee-jerk reaction, which almost always happens, is to try to recover it, right? And they're doing their best. That's where they're at. So I'm going to tell you this. If they're not above 17 quickly, in 1720, so if they don't beat this and that, they're going to come back and retest this. And if they fail, they will come back to here. They fell from point A to point B. They consolidated a while, and they lost the consolidation. They're trying to get it back. They need to get it back as soon as possible. Affirm. If I'm long, I'm worried. Why? If you lose this level right there at 37.50, you're probably going to end up at 29. How do I know that? It's not quite a head and shoulders, but see if I can give you a visual right there. Oh my gosh. Anyway, you see it, right? There you go. It rallied too much. The hate that it had last year turned into love. And too much love or too much hate is never permanent. They reverse it. They reverse it. They reverse it with vengeance, right? This is my estimate. It is not the worst case scenario. The worst case scenario is down here. I'm going to give them the benefit of the doubt. They will be able to withhold here. If you look left, there are not a lot of gold sticks, right? Or blue sticks. What is that? A gap. So if they lose this level of 37.50, let's call it 37, it's an easy trip to 29. There's not a lot of support. They haven't transacted here. There's not a lot of active traders there. All right, so that's a firm. ALB, if I was long and I benefited from this bounce, I would consider exiting because 128 looks like a difficult area. I don't know much about the fundamentals. They look okay, but the losses are not good. I would doubt it. I would doubt the rally to continue like unhindered to 136. So if I'm long from the base, I'm exiting. I'm booking my profit unless I'm an investor for the long term. If I'm an investor from the long term, this is not where I would start. Good morning. I would see if I wanted to buy dips into that stick right there at 116. That would be better. And if I'm long, say at 128, I would have been out on this bounce, to be honest, booked my losses. But it all depends on why one went long. To me, it looks like, first of all, we saw it coming. It looks like, look, on the screen. Upper left, this was a base that they lost. They tried to recover it and failed, right? You can argue that this was another one. Look at the battles right here, right? So this is a chunk of resistance up here. And arguably that they are trying to hang on to the 122 base. If they lose the 122 base, oof, ugly. It's going to get ugly. They'll be 92 and 88, something like that. I wouldn't buy puts, but I'm warning you. AMD. Also, all of this is going on while the markets cannot stop making higher highs. Okay. AMD. Completely dependent on what happens to NVIDIA this week. So it doesn't matter what I think. It matters what NVIDIA says and how people react to NVIDIA. The turquoise color is still a possibility. They haven't broken out of 180. If they take out 180, they have a good chance of taking out 184 and going to 194. So it's all about NVIDIA. Otherwise, I think AMD can be under 150 in the next couple of months. Can be. I wouldn't short it. I'm just telling you, if you trade AMD this week, you're gambling a lot. Coin flips, a lot of coin flips. Amazon, I opened a Walmart Plus account this week to see if it competes with Amazon. If it does, I'm going to give them less business. They're starting to change their ways a little bit. So we'll see what happens. They averted this down here. That doesn't mean it can't happen up here. So we can draw this right here. There's a decent chance it's at 162 in the next couple of weeks, 3 weeks maybe. Good company. You know me. I'm a huge fan. This is the best company on the planet that has ever existed in my book. I still say there's a weak spot right there. Let's put a V for void. If they lose this 165, 166, I think they can lose $5 or $6 pretty quickly. So I wouldn't hold calls. You could convince me to sell put spreads for a trade. It's a good company and it will have buyers and it won't fall alone. I doubt it. All right. Maybe it reacts to Walmart a little bit. I'm not sure. Arista Network, great company. I would buy the dip. I tried to buy the dip. I couldn't. There was not enough information. So maybe we'll try to dip again. Add to watch list. I will add you to my watch list, Arista Network. If you look at the P&L of Arista Network, it looks fake. That's how beautiful it is. Like if you wanted to say, hey, let's build a company and let's model it after, this P&L would be great. Look at it. Increasing sales, increasing bottom lines, consistent increase. There's no jagged up, down. It's just straight up solid, right? So there's nothing against the company itself. Maybe that there's not a lot of transactions below 255. So it's vulnerable from a technical perspective down to 235. Wouldn't that be a gift? So we have these sticks. These sticks are rejection of the dips onto the earnings. Let's see what they do. If they get to 240, you see my alert, it's right there at 252. I think I'd be interested in it below 252. So I could sell a put to own shares below 240 maybe. I haven't looked at premiums, or sell a put spread to trade it that way. Let's see what it does with the rallies. If the rallies come to 270, I think they'll be sellers. So if I'm long with calls and it rallies to 270, I'll be out. If I'm an investor, then there's nothing to do. APPN, I wouldn't touch it here. Great rally off of a must-hold situation, and now they're going into huge resistance. If I'm long, I was out. If I'm long as an trader, I'm out. If I'm long as an investor and stuck from 39, I would have been out. Personally, I know myself. I think getting to 40 and getting out from 40 are two different stories. ARM. I don't know what else to say about ARM. You know me. I said buy the shares at 52 or 3 or 4. I can't remember. Under 55. And now you want me to buy them at 128? No way. I'm out in the middle of the 70s. Not worried about missing out all of this because this was manufactured price action. I will not get long ARM until it gets back down below what I exited. I don't care what kind of math people are doing. It's not for me. It can go. It's like GME at this point for me, although it's, you know, fundamentally it's awesome. But the price action is like GME. I don't know who's buying it at 150, 148. I don't know how long they plan on owning it. I'm not that young. Let's put it that way. So it can be 2 digits in a blink of an eye. It rallies 40% a day. It can drop 20% a day, 2-3 days in a row, and we're at 98 or 90 and 88. So there's just a lot of manipulation. If you're on the inside of such chatter, go for it. Technically, 135 looks like a problem area. 137.5 on the higher point. And if they lose Friday's low, I think they can get to 112 again pretty quickly, or 107. I said the other day we're either at 104 or 114 or 144 soon, and I still stand by it. The range is tightening, and there's going to be an explosion out of it. So we'll see which way it goes. I honestly don't know. I think it's a lot easier to get to 80. Look left. There's no trades in the 80s. There's no volume. So if you lose 115, there's no support from volume. It's like a vacuum. It can go anywhere at once because there's no volume. All the volume is up here, all the volume is down there, and nothing in between. I've never heard of this company, but I think the person that submitted it, good job being long, by the way. They said they're up 90%. Is it time to book? Okay. I would never ask myself this question, and if I do ask myself this question, I'm always booking. Anytime I'm wondering about booking profits, I'm booking profits, if not almost. This stock has had its fill. If you cannot book a 90% profit, you need to practice that skill, because that means, are you really investing with experience or trading with experience? I said good job, right? So now I'm giving constructive criticism. Somebody that needs convincing to book a 90% profit, that somebody's a new investor. And one of the skills that you need to have as a new investor, you need to be able to book profits and be okay with it going an extra 20, 30, 40, 50, or double. Because booking 90% profit is never wrong, even if it doubles after that. Okay, that's one thing. Another skill is be able to book a loss before it turns into a huge loss. So yeah, you have my permission. Technically, it is bearish. ASML. By the way, I know nothing about AROC, but that's just a trading and investing comment. ASML It's one of those ARM companies. Look, there's no trades between 830 and 790, nothing. So if they lose 860, I know that's 865, that's a big statement. They can drop 80 bucks in like a second. So now the battles, if you're trading it, it's 960, whatever happened here, of course, versus the 837. If you lose 837, you're probably going to 840 or 830. Wait. 897, 887. I'm sorry, not 37. Like, you need glasses. Yes, I do. But my glasses are to see far, and my monitor is like halfway in between. 887. The bounce from, how about I give you a date? February 13th. If you lose the February 13th bounce, you're going to end up in the 830s. And when you're in the 830s, you look left, you see a gap at 790. However, the bulls are in charge. You're buying dips and making higher high. So how about this? For a trade, if it gets to 960, I would buy put or a put spread. It might be a stop hunt to go like this way and come back to here. So short the pop for a trade, or just watch it. And if you lose this guy, you'll end up down here. So this is a trading path, nothing to do with the company fundamental. If you say, oh, you don't know, they're selling this crap out of this. No, you're not listening. This is trading, not investing. ASML, I don't have anything against it. All right, let's see the P&L. P&L is fine, solid, stable, all of that. Clearly, this P&L is not improving at the same rate this thing is, right? So there's another story to it, which is the trade of ASML. I would short a poke above this, or you can short here with a stop that is above here, and watch this downside scenario. There's a weak spot down here. Okay. That was a trading comment. Okay. Boeing, I'm short and long personally in my account. I've sold a strangle down, I don't know, 180, 160, 165 maybe, and shorted several calls that have gone winning, and I keep rolling them down. At some point in the next maybe 3 or 4 weeks, I'll close my position. So I know I shared a credit put spread. The credit put spread is in the 185 area, so down in this zone. So if the stock market collapses, I might have to manage it. Statistically speaking, I believe it's still viable. Plus, we do have a lot of support through 197. If they lose 197, it'll be disastrous. But we have a warning. First is 202. If they lose 201, they will challenge 197. If they lose 197, then they're going to challenge our credit put spread. So you could make it smaller immediately and lower your odds, your size of risk, not odds of success. You can buy a debit put spread that's a little bit shorter time and higher than where you are. Let's say I open 10 credit put spreads down here. I would buy 2 debit put spreads up here. This way, if it continues falling, my debit put spread will kind of stop the bleeding, at least 20% of the bleeding. So that's one way to do it. Or I can just buy a put and protect myself from a whoosh. That put will be, it's like sacrifice put, or rent it for a couple weeks. I could sell a call spread, but then that opens another fight. So fundamentally, the company's fine. The recent door flying off may have disrupted the deliveries, and that's how they make sales. They have orders years out. They can't count it as sales until they actually deliver. And if they sideline the deliveries, then their sales are going to suffer in the next couple quarters. So be careful. Bungie. Wow, that is a big Bungie they did on earnings. So they gave you a big box to work with, that Bungie. This is the holy crap box. What does that mean? They loved it, they hated it, they gave you 2 extremes. So ping pong inside of those extremes. You have support now below $90, and you're going into massive resistance. 93, 94, and 95, and 96. Each one of them is a huge level of resistance. So if you know the company and you're investing in it, be careful. I don't know about this trend. The quarterly trend is not great. It's not super bad, but you got to study it. Technically, I just gave you the lines. BITO, Okay, so I'm out middle of the 21s. I can't remember. Made a bunch of money, not for a minute am I looking back, because I was also long crypto and I spoke to you about it in length. So now we do have a breakout in BITO, by the way, if in case you don't know, follows Bitcoin, and I do have to cover Bitcoin next. So I will cover both here. This is a daily chart, and you can see they're coming out of this wide ascending channel. So it is a breakout. I would contend that the breakout was from 18, and the breakout from 18 had $6 to $9 in it. This is 6 and this is 9. So Bitcoin can rally another 10% and not even blink about it. So here's what I'm saying. If Bitcoin rallies another 10-15%, it probably will try to make an all-time high, maybe even go into the 100,000 area. I'm not that guy. I'm not the guy, oh, it's going to 1 million, you got to hang on to it. No. I scaled out of a lot of my positions, and I'm keeping my core positions open in the crypto that I have. And they all move together. I have 2 more cryptos to look at. So BITO, if you're buying BITO here, you're hoping for more upside. The easy work is done and then some. You do have another 10% of upside. You do have they do pay dividends as well, but it's inconsistent. It's like an amount they choose every month based on a run rate for the year. Very strange scenario. So you better know what you're doing there. I would be, as a trader, buying the dips into 2380 or 2320, but I'm not doing it for myself. I'll wait for the next crash and I'll load up just like I did in bigger size than I just did. I'll show you the same comments from a Bitcoin perspective. You see, the chart has not changed, right? And I'll show you my lines that I've had for you for weeks, months actually. These yellow lines have been here for months. So they are here in my yellow lines. This is the target. And if this is the target, are you telling me that Bitcoin is not going to make another high if they get there? So that's a lot of selling up there. That's a lot of selling. Anything above 54, 55. A friend of mine said 57. I said, if it gets to 57, it's done a lot of the work and the bears are toast. It's going to go and make another higher high ever, like an all-time high. So there's still a lot of money to be made, but oh boy, if you're one of those people, like I have a friend of mine who got in trouble badly by getting advice to buy in at the highs and then exit at the lows and then try something else. And okay, this is not an obvious point of entry, although it is definitely tradable on the bullish side. How about that? That's probably the fairest thing. Okay, what are we looking at? BX. All right, so I've traded BX for us pretty well. This is a bearish setup unless they take out 142. I would expect they're going to 110, maybe even 95 over the next month or two, unless they take out 142. That's the weekly comment, so it's a slow moving comment. On a shorter term, the bulls are in charge. They're buying dips inside of an ascending channel. You can see it. Dip, bought, and a new high is made. Dip, it's being bought. Will they make a new high and challenge my 142? So trading different speeds, different comments. See, this arrow came to fruition, but they immediately bought it. Will it come into fruition again? The bulls are showing strength. They're buying dips. So they got this arrow done. This is less likely now, but it's still available. Caterpillar, great company. I wouldn't short Cat. I'd be just looking for entries on the long side. I believe it just made a new all-time high. So clearly there's a lot of risk appetite in the world. Oh boy, okay, what is this? So it looks like I copied prior behavior and I pasted it here. What is going on, Nick? I pasted it here. I think I just merely copied this. And look how accurate it is, right? So maybe it happens another time. So what do? If you want to short Caterpillar based on that thesis, go ahead. Just make sure that it's a finite risk, like sell a call spread, buy a put spread type of a deal. Unless they have earnings. Looks like they have earnings. No, they don't. So yeah, it is shortable, but or buy the dip when it comes back down below 275 or 280. So shortable from a trading perspective, but it's a beast. Cracker Barrel. Oh boy, if I'm short, and I know somebody that shorted it, I think it was Tom. If CBRL loses 70.6, it probably goes to 63. Now it has a lot of support, but it better not lose this level of support, which is where it's at. And again, this is happening when the stock market cannot stop rallying. So even though it has support down here, and I'm going to put SPP support, I'm going to tell you that the downside risk is I'm going to be very generous, conservative, like not penalizing it too much, and say this is the target. It's actually lower than this, but this looks doable. Let me zoom out. Okay. So this is Cracker Barrel. And just like there's support here, there's resistance above here. It's a zone. Anything above here is resistance, okay? CCJ, I believe, is copper. Provision, uranium. I shorted uranium a while back and won. It was a tough fight. Don't lose 41, CCJ. Do not lose 41, because then everything is on the table. 36, 37. Technically speaking, the bears are in charge. Technically speaking, this is available, but I would use it to exit longs, because if it curls back down from here and they lose this, that's what they'll do. Okay, so there is support, but it needs to hold. I don't know what T zone stands for, but somewhere in here lies a trigger. Support that needs to hold. A lot of resistance above. You can call it whatever you want. It's a neckline that's going to break. If it breaks, downside big time. CHTR, downside big time. I don't know what's going on with Charter, but that is a big dip right there. You got to respect it. So now rallies are going to be met with huge sellers. I don't think I would touch this one. The support is too old. I don't know enough about the business. P&L wise, I think they're okay, but Wall Street hates it when Wall Street is loving everything under the sun in the market. Not a good sign, right? So I think rallies will be met with heavy selling into 316. So they might lose to 80, and if they lose to 80, I'm going to put an alert and say, oh, they're probably going to 248. I wouldn't short it, but I'm just telling you that if you're catching the falling knife because you think it's going back to 380, it might not ever go back to 380 without a headline. CME, you're in the middle of a range. Nothing you need to do here. You have huge sellers. Anything above 315 has been met with sticks all the way back to 2023 last year. So this has not been an area of entry in a while. And you do have a lot of buyers into 208. So you have support below, resistance above. What do? Nothing. You sell an iron condor. If it's liquid, I don't think it is. Coinbase, everything all into Coinbase. No, I'm kidding. Coinbase, apparently the stock follows the price of Bitcoin almost 1-to-1. So if you're trading Bitcoin through Coinbase, I think you're making a mistake. Why? Because Coinbase will fall with the stock market regardless of what Bitcoin does. Trust me on that one. It might follow Bitcoin for a week without the stock market, but if the stock market is tanking, this one is tanking. Imagine if Bitcoin and the stock market are falling at the same time. Coinbase will be falling off the building. As they say, you take the escalator up and the elevator down, or something like that. Anyway, I don't trust the fundamentals. Yes, they had an improvement, undeniable improvement, but this P&L is garbage as far as an investment. A company that is this inconsistent in its P&L and apparently completely dependent on the price of a unit that they don't control is pretty risky as an investment. I wouldn't touch it. I would be more inclined to use MSTR because it's not a P&L story, it's a balance sheet story. They're accumulating coins. These guys are not. So these guys are completely tied to the temporary price action. The other guys, at least, they're tied into the ultimate success of the coin or not, if you're accumulating coins. So it's a pretty scary place to start longs is what I'm saying. I would not let my family members do that. I will tell them, if you want to pile in long to Coinbase, pile in long to Bitcoin. Technically speaking, this looks like a cup and handle, but it is not that easy. Look left. This was a huge, huge loss for the bulls. 215. Huge. So you're buying into a massive battle zone. Not an obvious entry point. Nope. Not an obvious point of entry. NOPE. Conoco. Oil is also dependent. Oil companies are dependent on the price of oil. So Conoco has a lot of buyers at 106 and a lot of sellers at 120. I think the sellers are stronger than the buyers. So there is a risk of losing 106. If you lose it, you have a better entry somewhere in the low 90s. Nothing against the company. It's pretty stable. Although, what the heck is that P&L? Yeah, I don't know about this. Let me see. Chevron P&L looks like that too. They kind of do. So you see, they're dependent on something else. As good as the management is, like Nike, imagine if Nike's shoe price completely depends on something outside of the control of Nike. I mean, their P&Ls would be a mess. These guys are great operators, but their sale price, their sales line is completely dependent on somebody else. So I gave you the levels. Investment-wise, it's a great company, so make your own decisions there. Carvana, the opposite of a great company. At some point, Carvana is going to tell me how they're going to make money. Right now, my biggest beef as an investment, in case you haven't heard it, first of all, their earnings in 4 days. Whoo-wee, that would be fun to watch. If I go here and I look at if they were selling burgers, that's the price of the burger. That's how much it cost them to sell the burger, to make the burger, sorry. That's the cost of goods, COGS, cost of goods sold. So burger, the bun, the cheese, the meat, the lettuce, the tomato, the ketchup, the mustard, you got no money left. How are you going to run a company with no money after you pay for the ingredients that go into your burger? And they sell used cars, right? So they're paying, this got a little better. They were paying more than this. So they're paying up for the cars so they'd have inventory, so they would have sales. So if they don't pay up for the cost of goods, which is a used car, they won't have sales. You see what kind of a vicious cycle they're in? What's the end game? They need to explain it. You can't do this for a while. You have to explain it. Now, technically speaking, if they take out 62 or 3, like this area, they will go up here. I would not hold calls for that. But around the earnings, any crazy stuff happens. It's about expectations. They don't even need to deliver good news. They need to deliver news that's better than what's expected. What do I mean? Let's say people expect a loss of $10 per share. I'm making that number up. And they come out with a loss of $5 per share, which is also hideous. But it's not a pile of stinking poop. It's just regular poop. So they will spike in relief. So it's all about expectations. It does not have to be good or bad. I don't know what they're going to say. So my instinct is it's either at 44 or 43 or at 75 after the earnings. I don't know. I will look at the options on the day of the earnings. It might give us a hint. CHWY, on the other hand, has a successful business right here, right now. So let's see the cost of goods situation just to be comparative. This is also a big cost of goods. The margins are tight, but at least they can eke out a profit that way. They're selling consumables, so they can control price and all of that and source out cheaper materials. But technically speaking, CHWY needs to hold 1650, and I told you that even when I went long. I said that's why we're only taking a partial position, because if the market hates it, they're probably going to drop it to 14 or 13, or 12. So if it drops 20% or so, I would add my second half. Therefore, I would be long CHWY down here somewhere. It's a fictitious scenario that hasn't happened, but I'm just letting you know, if it happens, that means the market's correcting hard and CHWY will be spit out. Chewed and spit out. So far, they're ping pong between 1650 and a lot of sellers above 1750. So be careful with CHWY. I wouldn't add yet. No. 20, 25%, then I'll add the second batch. I don't know this one. Community health. Okay. So great trend going into a pretty weird area of 4.4. 4.4 to 5. Like massive selling. can't imagine I would want to start longs now. If I bought the dip, I would be exiting here. If I'm stuck from here, I would be exiting here. Dash, they just reported, and the reaction was pretty violent, up and then down. So I don't know what it will take to eat up that candle that they fell from. So clearly there was too much love going into the earnings. Wow. I mean, what the fudge is going on with Wall Street? An 8% rally before the earnings, and then after the earnings they drop a lot and they're still high. So they broke out from here at 110. They went to the target, and now they just went back to the neckline. Technically, that's not bearish. That's a breakout confirmation. So now they can curl back down and go up. I would challenge the bears to break 122 and hold. So if you bought the dip, make sure you exit on the way up somewhere. If you invested and this gets you relief, I would reconsider my investment, because wow. Okay, so you remember prior support becomes forward resistance. Look how huge the support. These are weeks, so that's more than a month of bouncing. That's another month of a battle to try to hold that bounce level. They lost it, and now they're back into it. That's massive resistance. It's doable that they can break out of it, and then more resistance. You see how the easy work is done? The breakout is from here. That's one breakout zone. So any approach below 90 is a buy the dip with good confidence from the chart perspective, as opposed to chasing it up here. With that, we end video 1 for today.